Wondering if you should file jointly or separately? Here's what you need to know on this edition of Tax Tips by TurboTax. If you're married, you can file your taxes jointly or separately, but which is better for you and your spouse? In most cases, filing jointly will save you the most money. That's because when filing jointly, each tax bracket covers a higher range of taxable income than when married filing separately. This means that more of your income can be taxed at lower rates, often resulting in a lower tax bill than you'd get by filing separately. In other words, the greater the difference in income between spouses, the more tax you might be able to save by filing jointly. When filing jointly, your incomes are combined, and by combining your incomes, the lower income can help pull the higher income down into the lower tax bracket. However, there are a few situations where it might make sense to file separately. For example, if you or your spouse paid a large medical bill during the tax year, filing separate returns could help you write off those medical expenses, or more of them, as an itemized deduction. That's because you can only deduct unreimbursed medical expenses that exceed 7.5% of your adjusted gross income, also known as AGI. By filing separate returns, the AGI reported on each spouse's return will be lower, which will make it easier for your qualified medical expenses to exceed the AGI threshold. Note that different rules may apply if you live in a community property state. Plus, if one spouse itemizes, the other spouse will also have to itemize on their separate return. If you're unsure about which filing status is best for you and your spouse, TurboTax makes it easy to choose the right option to maximize your tax benefits. Visit TurboTax.com for more info to help you file your taxes with confidence.